My name is Samant. I run, I along with some really passionate colleagues of mine, we run a personal finance platform called as Squirrel. And the reason for us to exist is that we want to simplify money. We believe talking about money brings out various emotions amongst people. Not a lot of them are good emotions. So we feel that relationship with money for a lot of people is kind of broken. And we want to play a role in helping people improve their relationship with money. So that's what we do at Squirrel. Maybe I'll take a minute and tell you more about why we chose Squirrel. I think Squirrel as an animal obviously stood for all the values that we wanted to stand for. It's small, it's nimble, it's social, responsible. It is known for thinking ahead. It plans in summers for winters. That whole analogy about collecting nuts and creating a large pot which can help them navigate tough winters. I think those are the kind of brand emotions that we wanted to stand for, and the values that we wanted to stand for. So we've been around for a couple of years now. We went live in 2017. And I think we've been able to make a small impact in the lives of many users. Today we have about 3.5 lakh users spread across more than 600 towns, small cities in the country. And here we are. I just wanted to also take the opportunity to thank TapChief for having me here and giving me this opportunity to connect with all of you. I think this fraternity, which is called the Freelancers, and I think now very famously known as the gig economy workers, I think it's a very important pillar, and it also represents the transformation that the whole concept of a job or work is going through. So I think when I was growing up, the be all and end all used to be a job, a private sector job. And I think when my parents were growing up, I think that time the be all and end all was a government job. But I think now the opportunity set is so wide that not only can the natives of what we call the digital economy, not only can they choose what they want to pursue as a vocation, but also put kind of guardrails around how much they want to work, where they want to work, how they want to work. So we live in very interesting times. But I think this is something that is work in progress. Maybe I can spend a couple of minutes about what I understand is happening on the freelance world and the gig economy, so to say. It is not that this is something completely new. I think we've had this freelancing kind of model exist for many decades. I think the big tipping point came to my mind in what is called as fashionably called as the GFC, global financial crisis in 2008. I think there was a big upheaval in the caused by financial markets, had a ripple effect in the world economy. There were massive slowdowns and so on and so forth, resulted in a lot of job losses. I think parallel to all this negative turn of events was also the embracement on adoption and popularization of internet. I think at the culmination of both these, so at one point in time, a lot of people didn't have jobs or vocations. On the other side, internet was actually helping people connect. Um, and I think at the culmination of both these came a very, very interesting opportunity, which is that people started to offer their skill sets um, to people who were needing those skill sets anywhere across the world. Physicality was not a problem. All you needed to do is to hook on to an email or a computer or a Facebook. Um, and Obviously, I'm not sure if TapChief was alive at that point in time. But yeah, so I think at that point in time, people kind of started doing these gigs, assignments, consulting projects, and helping people who needed these kind of skill sets, experiences, domain knowledges. And I think that kind of caught on, became a movement in itself, and things started to get formalized. And before you know, I think I was reading a data point in US. Almost 28% of the jobs or the workers are now using gig economy or doing freelancing and kind of building their careers. And at some point in time, I must also say that maybe it was not looked at seriously in the past, saying, oh, you don't have a steady job and so on and so forth. But I think all that has also changed now, and people are, a lot of professionals are actually choosing to go this route and build their practices, build their careers in the form, fashion that they want to go about doing it. So I think this is something not just here to stay, but I think probably going to become a mainstay in the coming decades and so on and so forth. But I think today's topic is also very, very critical, which is about managing money, personal finance challenges, and so on and so forth. And here I think I want to maybe quote a couple of my experiences here. So generally what I've found is that because these are individuals and they don't have an organizational strength behind them, powering them, what I found is that when you talk about money, right, that kind of scares people. I've always, they want to run away. So if you are, let's say, a UI UX designer, and you are so passionate about what you do, but you sit down over a cup of coffee and have a chat about money, and you realize, oh, you know what, this is something that goes right over my head. I don't understand. It's maths, it's accounts, and so on and so forth. And I think finance and money has that kind of a notion around people that it kinds of drives people away. And to that extent, that's the opportunity at Squirrel that we have, that can we dispel that notion and help people improve that relationship. So coming back, I think the only thing I want to highlight here is that it's not as bad. So people who are good with money are not necessarily good with maths. It's not all about accounts. It's not about number crunching, right? I think my little experience here has taught me that people who are good at handling their money are actually very strong emotionally. They are able to take control of their emotions and ride those cycles, and don't get kind of baffled when they are around numbers and so on and so forth. I mean, you need a little bit of understanding, but that's not necessarily what kind of makes you smarter about it. So I think today what we can do is that maybe we can spend some time, and I actually kind of put together 7 things that I thought specifically from freelancers perspective and professionals who are working and trying to make it big in the gig economy, they could use these tips, which could kind of help them navigate their journeys, respective journeys, better. Um, but again, I want to start by saying, why is it even a more critical skill set for all of you than somebody who's in a formal job? And I think that's at the bedrock that I want to kind of stress on, that there is Mr. A who has a steady job, and there is Mr. Z or Miss Z who's for the purpose of our discussion, say, who's a very successful UI UX designer. So I think that the Mr. A can still go by because he's in a job. Like I said before, he's got the power of an entire organizational structure behind him, which is kind of guiding him at each stage, at each step. But I think Miss Z is all by herself, and she needs to do her BD, she needs to do execution, she needs to take care of her finances, she needs to take care of her filings, GST. I mean, I've got a lot of questions about GST. Obviously, it is driving people up the wall. So I think to that extent, it is therefore an extremely important skill set for people who are in the gig economy to kind of manage this well, right? You're all by yourself, right? And the other thing is, of course, the predictability of income, right? When you are in a job on a certain date every month, the sweet sound of that SMS where the money gets credited in your bank account is music to our ears, right? But I think for Miss Z, I think it's not that smooth. There could be months where things are going super duper, and there could be a few months where things are not up to the mark. And I think that therefore, from a cash flow perspective, that predictability in a job and not having that predictability for somebody who's in a gig economy is, I think, also something that scares people, drives a lot of people up the wall. So I think therefore, and I think this is where another thing, when I met people, so you ask somebody who's in a job, so how much money do you make? That comes the reply, oh, you know what, my salary is 12 lakhs per annum, so I make ₹1 lakh every month. But you ask this question to a freelancer, and even if the number is same, first of all, that number is difficult to arrive, right? Because it is not a simple number, because it varies. But let's say somebody says, oh, you know what, for the entire year I made 12 lakhs. But if you were to then say, oh, 12 lakhs divided by 12 months is ₹1 lakh, absolutely not, because it is not a steady state ₹1 lakh. For a freelancer, for a professional, the numbers don't come in a straight line. They come in like a stock market graph all over the place. And that is what makes it a more harrowing experience. And that is exactly the reason I feel that this is a skill set, or this is a domain that is something that you cannot ignore. Rather, you need to get your arms around it sooner than later. So, like I said, I just thought I would, from my little bit of experience, share these 7 tips that I thought specifically for the professionals in gig economy that they could find useful as they build their journeys and careers. So to start with, I like to start with this fund. I call it as the emergency fund, right? When I was growing up in college, my ATM used to be not automated teller machines, but anytime money, anytime mummy. So just go to your mom's and ask for money. I think when you're on your own, things are different. And and specifically for people like you, where there is no steady state check coming in, one of the first and foremost advice or a tip that I would leave you with is to build an emergency fund. Right now, the emergency fund is basically to take care of, as the name suggests, any emergencies, which could be loss in income, not keeping well, suddenly getting a big notice to pay some tax, could be anything, right? So the thumb rule here is that 6 months of your expenses, right, as a lump sum. Suppose your monthly expenses, let's say 25,000 rupees. So 1.5 lakhs is something that should be kept aside. It should be a fund that can be easily accessible, should not be invested in any instrument or any avenue which is locked, which has a problem taking it out, or should not be put in a place which is highly risky, should not be, definitely I would advise to put it in stock market. You don't want that the month that you end up needing that emergency fund, markets are down 20%. You don't want that to happen. So I think my advice there is to use something really, really safe, but build that corpus, keep that money at bay for a rainy day. The second thing that I kind of want to talk about, or the tip that I want to leave you with, is while by very nature, the whole negative aspect about freelancing is that you don't get the check. How can you turn that around, and how can you make that negative into a positive? I think the way that you can do it is to basically pay yourself first. So you know that your inflows are lumpy, but your outflows are predictable, right? So you know that you need to pay the rent, you know that you love eating out every month, you know that you want to do shopping, you know that you want to take a vacation, let's say once in 3 months, once in 6 months, once a year, the way you like to do it. So there is some sense to that madness in terms of the outflows. So I think the best thing to do is to kind of figure out, depending upon, let's say you have a consulting assignment and the money comes every quarter, I think you need to figure out a manner in which you can pay yourself a steady state salary out of those lumpy payments, so that you don't feel the pinch of not having the money. So if that lumpy money is coming, it has to be locked in somewhere safe, and then you need to pull out, just like a salary payment, first of every month, draw down that fixed amount number that kind of sustains you. It should not pay for your luxuries, it should not pay for all your wants, desires. It should only pay for your needs. That basic number should come to you. That is something that you should not be worried about month and month, and that is something that you need to pay yourself first. So that's what I call my tip number 2, is pay yourself first. First was build an emergency fund. The third thing, I think, which a lot of people in this domain struggle, is to kind of draw a line between personal and professional. I think what happens is that because you are who you are, and you don't have a corporate structure, you don't have a battery of people working for you, I think it is important that you have just one bank account. Everything comes in there. So you're spending on your own self from there. You're also spending on building your business out from there. You're paying your rent also from there, and so on and so forth. So I think what would be a good strategy here is to draw a very strong line between personal and professional. Maybe open 2 bank accounts. So like I said in my previous point, pay yourself first. Let all the money, business income, professional income, go into the business account. And then you pay yourself, transfer a little bit of money as your salary into your personal account. I mean, both of them are your personal, but I'm just trying to make a distinction between your business account and your personal account. So you put some money in your personal account, and all your personal expenses, right? Eating out, shopping, drinking, whatever you enjoy doing has to come from that account. And anything that you end up paying for building or furthering your business and your profession has to be paid out from the business account. It has two advantages. One, I think you are able to distinguish these two buckets separately, respect them separately, right? So you need to have a very clear handle on saying that, look, this is the amount of money that I end up making. This is the amount of salary that I can draw. And therefore, this is the kind of a lifestyle that I need to live as a subset of that number, right? And on the other hand, so one is this respect for business and personal has to be kind of segregated. The second advantage here is also from a business standpoint, right? From an accounting standpoint, from an income tax standpoint, you are allowed to deduct expenses, right? So let's say you build a client, Miss Z, she did some UI UX assignment for somebody, got paid 5 lakhs, right? But let's say she bought some software, some libraries, which helped her execute the product. Bought some icons, right? Bought a new computer. Maybe outsource some of the stuff, right? Pay rent for a WeWork or a co-working space or an office that she works out of, right? So I think these are all expenses which are tax deductible because they were incurred to get that business, service that business. Those have to be paid out of the business account. And therefore, what that helps is, from an accounting perspective also, it gives you a great sense of modeling your expenses, getting your accounting right so that you minimize on taxes. Very, very important. You don't have, and I don't need to repeat this again, you don't have a battery of people, accountants, to help you on a day-to-day basis and sort all this out. So I think it is better that if you can institutionalize it, right, build that discipline, that I think you will find could be a great favor that you do to yourself. The other fourth thing that I want to kind of make a point here is also that by not being in a structured organization or a job, the other disadvantage that you may end up facing is the fact that protection, right? I'm talking about health insurance, life insurance. A lot of you may be young, may not have been exposed to the cost of healthcare in India, but it is alarming, right? The cost of going and getting yourself a prescription and going through something as basic as a common cold is not cheap. God forbid if you get dengue and chikungunya and so on and so forth. So I think, and then there are more fatal categories, and I don't want to spoil the mood on this Tuesday evening. But all I want to say is that in a organized structure, companies today provide health insurance to their employees, and there are those benefits that are extended. So you may still get away because there is that structure which is ensuring that your well-being to a certain extent is being taken care of. But I think when you're on your own, you have to look out for yourself. You are your own sole breadwinner. And if you've got a family to support, then obviously there are more dependents and therefore more responsibilities that come on you. So the point that I want to make is definitely don't ignore health insurance. And I don't know on the life insurance, but the fact that that call has to be taken. What stage are you? What age are you? Do you have dependents? What if something was to happen to you? Their dreams, their aspirations, will those need help? Will they need support? If yes, I think they would. I think if you are married, if you have kids, so on and so forth, it's a good time to start thinking about life insurance. But if you're still single, I think you've still got a few years to kind of push it back, maybe take that decision at an opportune time. But my humble submission to you is don't ignore the health insurance. So that's my suggestion number 4. Going ahead, I think the this is something that even I have embraced or learned the importance of over the last 5 years, which is about harnessing technology. I think, especially on the world of savings and investments, that's been my bread and butter bloodline for the last 20 years. What I've realized is savings is people feel, oh, this is a millennial problem, youngsters' problem. Old people were able to save so much and all that. I kind of don't agree to that, right? I think savings is a emotional problem. It's a human problem. If left to me, I would not like to save. Spending is so much more fun, man. I can spend in Goa, I can go out drinking, I can do shopping online. There is so much that you can do, right? So I think savings is so much, spending is so much more fun than saving. So it's a human problem, it's an emotional problem. I think the solution here is using automation. The moment you throw technology at that problem, it kinds of builds rigor, it builds discipline. So I would think that not just, I'm just taking savings as one example, since I kind of know that very well, but I think in all the practices that you do, like I talked about building separate business and personal accounts, tracking your spends, I think use technology to the hilt. Whatever you can automate. Simple example I'll give you that I've done for the last 20 years, right? All my utility bill payments are automated onto my credit card, right? Pay credit card bills on time. Don't use credit card for credit. Use them for convenience. Pay all your bills there automatically. You will never miss a date. You don't realize that in percentage terms, every time you miss a date on paying your telephone bill, electricity bill, so on and so forth, these guys charge you 200, 300, $500. Yeah, that's like a good 5, 7, 10% penalty. Right? So if you automate it, it goes on time, before time, never miss a date. And on top of that, card companies give you some bonus points for it, reward points for it. You can buy or accumulate 5, 10, 20,000 points every year. Use that as a buy something on the Chroma or Amazon or whatever you want to do. But all I'm trying to say is use technology to the hilt. Automate as much stuff as you can. Savings, investments, bill payments, whatever you can do, automate. And I think here maybe I should kind of talk shop here as well. I'll take the example of something that is one of our most popular offerings, which is targeted at savings. We learned that savings is a very large problem. So what we basically went around doing is that we realized people are not able to save, and spending is so much more fun. How do you marry the problem? So we basically embedded ourselves in the problem itself. So every time somebody spends, the loose change kind of gets invested. It is a forced saving, happens automatically. Somebody takes an Uber to work, let's say the $8, it gets rounded up to the next 100, $12 are saved. Then he goes out, takes a colleague out for a cup of coffee, bill is, let's say, $98, 2 rupees are saved, right? Buy something online, shopping, $144, 56 rupees are saved. So the idea is that you don't need to have a guilt. It happens automatically, and it happens in a bite size, something that won't pinch you, right? So that's what we feel is one of the many uses of using technology to really harness what you want to achieve through discipline, right? So I am a big advocate of using technology to kind of manage an efficient ship, right? The sixth point that I want to, or the tip that I want to kind of talk about, is about the tax shock. And here again, I think it is important that we look at it from the lens of freelancers and the gig economy professionals, because again, what happens in a formal structure is that you have a company, you have a HR team, they take your declarations in the beginning of the year, your TDS is deducted. By the time you're through with the year, you basically paid the income tax, you file the return saying this is what I earned, this is what I should have paid in taxes, and here is the amount which has already been deposited to you by the company as a TDS, right? Majority, right? So what I'm trying to say is here, that problem is kind of taken care of. Now let's go to cut the chase to Miss Z, right? She probably did, let's say, 4 of those kind of assignments of UI UX assignments in the year, made 20 lakhs, right? And she did everything fine. She bifurcated her business expenses, personal expenses, whatever money she came through. She said, wow, this is great. All the profit is for me to spend. Went ahead, spent it. End of the year, now she has a tax bill. She has to file a tax liability. Nobody has deducted planned the income tax, paid it every month as she has gone along. And at the end of the year, she gets a big shock saying, oh, you know what, I need to pay 3-4 lakhs in tax. I didn't plan for it. Neither did I plan for tax, neither did I plan for tax savings. So I think because that infrastructure is not available to you, I think it is equally more important, or rather more important, for you to plan for it. I think you need to kind of estimate your tax liability as you go through the year, and kind of provision for it, that this is something that you need to pay. There are sections, there are deductions, there are rebates that are available legally in the Income Tax Act for you to save tax, not avoid tax, not evade tax, but to save tax, right? And I think that is something that you can legally do in the right with right planning. After all, it's your hard-earned money. I mean, you're fully entitled to plan it in a manner so that you pay less taxes and take more home. So I think that is my 6th advice to you, that make sure that you plan for income tax saving very, very judiciously as you kind of go along. So that's my tip number 6. My last advice on the tip number 7 is that when it comes to specifically around investments, I think enough has been done in the fraternity in the last couple of decades, and there's a huge machinery, a battery of distribution partners that are all out there trying to sell you products, saying please buy this product, that product, and so on and so forth. I think time has come for you to look beyond the product, and anything that you invest in, don't look at it from a product, look at it from an outcome oriented, right? So I often say, don't buy products, buy goals, right? Whatever you are doing, tie it down to an outcome. Saying, okay, I want to save for a vacation. Let's plan for a vacation. Let's build that goal accordingly. I want to save for a new car. Let's plan for that. I want to save as a down payment for my house. Let's do that. So everything has to be outcome oriented. The moment you start buying markets, oh, you know what? This is the new government that has come to power. Never before majority. Markets will double. Let's buy this product. Markets are nobody's slaves, right? They have a mind of their own. They don't know that you are also a part of the same journey. They're just having their own kick in life. You may be serviced well, you may not be serviced well. And very often one finds retail customers are not able to make the best out of it. And my humble experience there is, it is not for any other reason but for discipline. If you're thinking that you will land up on the scene and you will be able to put your money in and take 100% return and walk off, it's a zero-sum game. Somebody else has to pay that 100%, right? So I think the fact is that if you put discipline, automation, and link it to your outcomes, that's something that is really, really critical. And in that outcome, I want to just leave you with one of the most important outcomes, which may not hit you right now. I think young and there is so much to look forward to, is retirement. I think because again that you are not part of an organized organization, there will be no provident fund fund, there will be no gratuity, there will be no pension provident for. In an organized company, a very small part of your salary every month is deducted to create a pool for you, for a provident fund, for gratuity, for a pension that is given to you as a lump sum or whichever way once you retire. That is made available to you for your social security, as it is called. But I think when you're on your own, all these things are kind of very easily diverted, skirted, forgotten, because they're not on the priority radar. There again, I would encourage, Government of India has a very, very good scheme now, initiative called as the National Pension Scheme. It's low cost, it is long term, and on top of that, it gives you tax advantages. So while you save your money for your own future, you're also getting tax breaks by paying less tax in this year. So overall, fantastic opportunity. So my tip number 7, link it to a goal. End goals are very important. Don't buy markets or products. So these are the 7 things that I wanted to leave you with. I'll just do a quick recap. Definitely have an emergency fund. Pay yourself first. Very, very important, right? Keep your personal and business interests separate. Fourth, definitely protect yourself. Health insurance, very critical. Life insurance, depending upon the stage that you are on, right? Use technology to the hilt. Automate as many things as you can. Remember, you're all by yourself. You don't have a battery of colleagues, people working for you. Automate. 6, avoid the tax shock. Plan your taxes very, very, very well in the beginning of the year. Should not lead to a situation where you are suddenly left with a big tax bill at the end of the year. Use tax savings efficiently. They are within the purview of law. Government has kind of given those breaks to all of us. And lastly, don't buy any products, buy goals, right? So I think these are a few tips that I have. Maybe we can take a pause here. I've done quite a lot of talking, and we have a bunch of questions that some of you have been very, very kind enough to send in advance, and any other questions that people have here. How does maybe I can take a few of those. Okay, so I will take Ankit's question. I think, Ankit, I am not maybe the best at answering this, but this is where the gap is. So you're saying that you're a freelancer, and why shouldn't, let's say, State Bank of India give a project that they want to get done to you rather than giving it to an Infosys or a TCS? And I think I have thought about this question exactly the way you are thinking. And my quick answer to you is that I think the stage at which maybe a large corporation like, I'm sorry, I'm taking an example, don't take it otherwise, but let's say an organization like a large bank would probably want to go with a large provider is the very reason that they are outsourcing it. They don't want to manage people, right? They're saying that if I was to do this on my own balance sheet, let's say I was to build a whole IT company inside, hire people, get them, I don't know whether I will have this app or use case for next 5, 7, 10 years. 2, they believe they will not be able to attract and retain the best talent on the IT side. Let's say if I'm a bank, I may be able to attract the best talent from a banking perspective, but I'm not sure if I'll be able to attract the best talent from an IT perspective. So therefore, I think they want to outsource. B, when it comes to large versus small, I think their preference is very clear. They don't want to. They will be probably requiring multiple skill sets, multiple layers of skill sets, multiple geographies. So they don't want to therefore deal with thousands of people. I think the fact that they end up dealing with one of them is great, because then they're able to have an alignment with that organization to say these are the 20 types of products or services or skill sets that we are looking at, and these are the 20 locations that we are looking at, and we don't want to be then necessarily going and speaking to each one separately. And I think that is where that marriage we have seen often kind of works out better for both of them, right? I hope from the sense of your question I get is that while you want to build this out, I hope you are able to build a large firm for yourself and one day maybe be able to put your hat in the ring for getting one of these large clients. Hi, Kartika, you have a good question in terms of if I can recommend a few useful finance money management apps. I think it'll be unfair if I don't talk about Squirrel, though I did allude to it a little bit before. But I think Squirrel today is helping people improve their relationship with money. I think how it does that, it helps them save, it helps them plan for their goals, it helps them plan for taxes, very, very critical. We very, very recently also kind of gone live with some protection offerings on insurance, and also now helping people be able to achieve their dreams and goals which are short-term in nature by even borrowing money in terms of loans. So I think we will continue to expand our horizon in terms of playing a larger role in the life cycle of our customers. I think there's lots more for us to do, and we continue to get feedbacks on how to improve, and looking forward to an exciting future working specifically with the freelancing and the gig economy professionals. Mamta has a question saying, is it true that freelancers don't get loans? Is it harder to avail tax benefits as a freelancer? So the two separate questions. I think I will maybe probably take them separately. Mamta, honest answer is yes, that freelancers don't get loans that easily. Okay, so a salaried versus self-employed, there is a difference. But can I be honest? It is not because of the fact that this guy is a freelancer. I think it is because of the fact that they don't manage their finances well. So if a borrower, that means if you go to a bank and the bank wants to assess you to give you loans, and they say, please show me how much is your income, a guy who works as is a salaried guy will instantly pull out his pay slips and give you and say, look, these are my last 6 months pay slip. This is my bank account. This is where my money or my salary gets deposited. You can see that I have a balance, and so on and so forth. So it is easily demonstrated. I think it can be easily demonstrated even in the case of freelancers or self-employed. It's just that they're not taking that small step of, like I talked about, segregating their business and personal expenses. If you were to segregate those, and if you were to be able to demonstrate, to say, look, this is what my self-employed financial situation is. These are the assignments I do through the year. These are the inflows, cash inflows that I get. These are my outflows on account of variables in terms of my rent and my expenses and let's say my salary and so on and so forth. This is the key cash flow statement for me. I think the banks will be more than happy to give the loans. So my answer to you is yes, it is difficult, but it is not difficult because of anything else, but because of the fact that they are not able to demonstrate that discipline and put those documents properly, right? So I hope I've kind of addressed your query here. Maybe it's a good time to kind of take some of the queries that we got at the on the sheet, on the link that we had posted out for the event. So I think a couple of questions around tax again. First of all, I think there was a question to say, is the income tax structure for a freelancer different from salaried? So that's an easy one. Actually, profits and gains from business or profession are looked at similarly from an income tax perspective. In fact, The advantage is that in your case, you're allowed deductions. So you can deduct your rent, you can deduct your travel costs, saying I took an Uber and went to meet this client. Those are all deductibles. I paid rent. I outsourced some part of my business and so on and so forth. So I think some of those things are allowed as deductibles to you. Other than that, it's all saved. It's all the same. The other question that I had is, do freelancers need to save tax? Maybe what you meant to ask is, can they save tax? I think the answer to that question is that yes, you can save tax. Of course, you can save tax, and all the tax breaks, whether it is Section 80C, Triple D, all of them are available to you. So you should use those to the hilt. A lot of questions around investment planning as well. Maybe I'll pick up a couple of those. How much should freelancers? How should they invest their earnings, mutual funds or stocks or any other ways to invest? So I think simply I would start by saying maybe take a little more systematic approach to this. You should start by, I'll probably go over this again, start by building an emergency fund for yourself, and then start building buckets of investments for the goals that are important to you. So if you want to buy a car, if you want to save for your own startup, if you want to save for buying a house, if you're married and you want to save for your kids, I think each of them are goals, and you should prioritize goals and you should start investing in those. For retail customers, I love mutual funds for a simple reason that A, they are easy to invest in, they are easy to move out of, they are tax efficient, they offer great diversification. I think there is an advisory component built into it. So when you buy a stock, you buy one company, the fortunes of that company decide your fortunes. But when you buy a mutual fund, it is a pool of stocks or securities, as the case may be, and therefore your risks are always spread over a larger number of stocks and securities. So you risk adjusted get a better return. So for a person who should rather be focusing on your vocation, on your profession, on what you do, I think mutual funds offer a great way to participate and create wealth. So that's where that's what my 2 bits about it. What options do I have if I want to invest but have an easy way to pull out, instant use of? So I think here again, I will go back. Mutual funds turn out to be a great avenue. I think you can invest your money, they offer liquidity. Some of them have an early redemption charge. So if you take money out, let's say for an equity fund, the charge is generally for a year, 1%. So if you put money in equity, which is, they are basically trying to instill a behavior saying, don't try and use a mutual fund to time the market, trade the market, build a long-term sustainable habit. So if you, it's not that the money is not available. Money is available as and when you want. They may charge you like an exit load. It's called an exit load to kind of give a small pinch to say don't use it for short term, but the money is available. There are some types of funds which are specific funds, very niche funds, like the liquid funds, and not all liquid funds, but some liquid funds which offer an instant redemption. Up to 50,000 rupees, you can get your money back instantly. So Squirrel Away actually, our feature uses those kind of funds. So, and they don't invest in equity, they invest in money market instruments, which are relatively very, very safe. So yes, there are various type of schemes which offer in various type of securities, offering varying degree of flexibilities for you to invest and take out your money as per your convenience. There is also a question about why mutual funds aren't FDs safer. So I think this question of safety is very, very important. So I'm not going to try and say mutual fund is more safe than an FD, but FDs are definitely very, very safe. But then, you know, there are instances, there is black sheep everywhere on both sides. On mutual fund side also, there may have people who may have had a bad experience. On the bank FD side also, people have had a bad experience. You're, I'm sure, aware and reading about some cooperative banks which have kind of gone kaput. So I won't say that you should compare both. I think these are two separate categories, and maybe you need to have both. You need to have some amount of money in an FD and some amount of money in mutual funds. An FD typically will be a fixed income kind of a scenario. Mutual funds can be great, can be used from an equity perspective, which offer a much better adjusted return, better than inflation return, more tax efficient. So I think you need to probably, why make that choice? Both, right? A very good question, and I think this is something that we get quite often, saying, I'm in my mid-20s, where should I be investing? How much money should go into high risk, medium risk, low risk, and so on and so forth. So I think the way we have kind of tried to simplify, and I go back to our credo or our reason to exist, to help people improve their relationship with money, is not to complicate matters further, but to simplify it. So the way we actually end up answering this question is a simple thumb rule: 100 minus your age should be your exposure in equity. The rest should be in fixed income. That's a debt. So let's say if you're in 20s, 80% of your disposable savings should go into equity markets. 20% should go into fixed income. As your age starts to go up, your exposure to equities should start to come down, and that's a great way to balance your portfolio in line with your age. And with age comes life stages, and therefore your requirements. So that's a quick way that I would want to maybe answer that question. I want to say, for my retirement, how should I start? I think I already answered that question. I find NPS to be a great avenue. You could use those. One quick question I want to take last around GST, which is to say it's a big pain, and how does one handle it vis-a-vis the, especially for freelancers. I think the good news is that, let me start with the bad news. Bad news is that there is no escape, right? The good news is that the government has now said that up to 20 lakh rupees worth of annual income, there is no GST on you. So as long as you make less than 20 lakhs, you don't need to basically pay any GST. On the flip side, any GST that you pay, so let's say you bought a computer to do your work and you paid GST on it, you get credit for it. So in the year that you cross that 20 lakh threshold and you start to kind of pay GST, those credits that you have will be probably available for you to set off. So you have a benefit of getting that credit, but you don't have to pay GST up till 20 lakhs. There was another question saying, do we need registration or not? So I think it is, from all the use cases, it is probably beneficial to get a registration. You are in any which way is not going to pay GST till you cross the 20 lakh threshold. So I think it's been quite a joyride speaking to you guys. I have obviously kind of maybe gone a little overboard from the time that was available to me. Hope you kind of liked it, and thank you for being this audience. Thank you for your questions, and happy gigging to all of you. Take care. Cheers.